Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Nothing really new this week. Data continues to be bad. Central banks continue to be hard at work with the RBNZ at the latest to increase QE and even talking about negative rates. That really brings me to the US, where the market has started to price in negative rates for early 2021, which I think was a bit surprising given the way Powell has been speaking in the past about it. Furthermore, ahead of the Powell speech on Wednesday, we had about 8 Fed speakers, and they're all, including the Uber Duffs, have really pushed back on the negative rates. I wasn't quite sure why the market still kept pushing for it, but even Powell at the end did really push back. I think the other important thing for me on the Powell speech was similar to the speech he had after the last FOMC meeting, where really it was very sort of somber. He was really, you could tell he was shocked about the data that he sees, and he didn't really create a lot of confidence the way he was talking. And really, there is just no sort of V-shaped type of belief in what he said. And at the end, he really reaffirmed that the Federal Reserve and the government might continue to have to support the economy to get us through this. So that's really a little bit a somber kind of take he had, which resulted obviously in a stronger push lower in the stock market. On the other side, we have the sort of US-China issues flaring up again. We had the China bill coming into the Senate. We have the Hong Kong bill coming in. We have Trump tweeting all day long as far as thinking about cutting out China altogether. So it does seem as Trump is starting the sort of anti-China rhetoric, which may well be a sort of election campaign story and may last into November 2020, which obviously is not that encouraging for risk or equities altogether. But at the end of the day, he will need a scapegoat. I want to quickly show you a few of the charts, just to look a little bit under the bonnet of the US economy. We looked at various things in the past. I want to bring a few other things to look at. This is the CAS truckload line haul index. As you can see, trucking is obviously a big part of the US economy, and we are really starting to break these 2008, 2009 lows, or sort of equal at this point. So this is one to watch if you want to look at the recovery in the US. The next is something very similar, that is the freight index, the shipment index. We haven't yet approached a 2008 level, but we're really not that far off, which the chart below is just the expenditure as well, which again hasn't yet hit 2008, but all these indices still rather pointing on the downside, and obviously as lockdown still is going on, that will not change anytime soon. On the next slide, I bring back the Dow. Really mainly we sort of held the backside of this 4-year trend line on the top side when we talked about this 24,600, 700 area. We dropped around 7% from that level and got really close to our first target yesterday at 22,500. I think we were about 200 points short of that. We might range around a little bit here, but with this sort of increased possible deterioration in this US-China relationship, there is clearly continued downside risk in equities, as well as obviously the difference between equities and the real economy, which is still looking rather poor. On the next slide, something more exciting in terms of the gold bucks out there. After almost a month of consolidation in this triangle, we actually managed to break out yesterday, pushing towards the 2020 highs, which obviously is the next area to watch, is 1747 level. And I would have a weekly chart for you as well on the next slide, which is just showing the sort of bigger picture. We're sort of taking out this 1714 Fibonacci level, which is the last one before the old highs. We sort of range around there now many weeks, and so this is the next attempt to possibly start to push higher. The next target on the top side will be around the 1790 handle if we could stay above the 1714, and this could really be the next leg higher for gold. So all the gold bulls and could be quite happy in the sort of weeks to come. So there's definitely a chance that we push higher on the gold. This is really it for me for this week, and I'm looking forward again to speaking to you next week. Stay safe and all the very best. Bye-bye.